Hey everyone, this is Justin with daytradethemarkets.com on the 29th of May 2012. Hopefully you had a nice 3-day weekend, got a nice break from the markets, and got back at it today. Wanted to look at the ES from today and specifically zero in on the aggression bars and what they were telling us from today. I know the last few videos have been about this, but it's just such a telling tool as to which side is in control of the market. And we have a lot of pieces of evidence that we use within the software. We've got these deceleration bars, we've got the intraday filter, we've got the intraday resistance and support zones, and we talk about bigger picture bias and bigger picture key levels. And the idea is that you take these pieces of evidence to help you make better decisions and make better sense of the market. What I really want to zoom in on though today is what we call our relative aggression bars, and bring this over to show you. But we have three levels of relative aggression bars: level 1 positive, level 2 positive, or level 3 positive or buying, and then level 1, level 2, level 3 selling. And that's telling us on a relative basis. The software is analyzing the order flow, or kind of looking beneath the surface of the market to see which side, buyers or sellers, is more aggressive, because it's aggression that actually moves the market. And you can see, and so what we look at here is the level 2 and level 3 buying and selling bars as basically our roadmap throughout the day as to which side is in control. So if we go back to the chart here, what I'm going to do is zoom in on the first half and then the second half of the day and talk about how these relative aggression bars really tell the story about what's going on in the day. So you can see early on, what I've done is I've taken off the level 1 buying and selling aggression bars and just left the level 2 and level 3. Okay, so what we talk about is, when we have one of these level 2 or level 3 buying or selling aggression bars, we want to see what happens, because our expectation is that for a buying level 2 or level 3, that the low will hold. And you can look at this as kind of one wave, these two. So the low holds. The next one, does the low hold? Yes, it does. Does the low hold? Well, it holds temporarily, but you can see we then didn't get any follow through higher. Okay, and instead we got our first sign that there was some selling aggression coming into the market here. And then shortly thereafter, we had follow through below the low of this selling aggression bar, as well as the low of this buying level 2 aggression bar. So that's our first sign. While at this point the market's been firmly in the control of the bulls, this is our first sign that the bears are starting to come in. And then you can see we have another level 2 selling aggression bar. The high holds. Then we have follow through lower. You can see we have another one. This one doesn't even test its high, it just has immediate follow through lower. Same thing here, where now this one here is a level 3 or extreme selling aggression. Okay, and so what you see here is the high of this bar wasn't even tested. And when that happens on a level 3 and we get follow through below, then we would expect that the low of this bar is going to hold. Okay, so you can see the low of this bar acted as nice resistance, as well as the high of this bar. So at this point we still say, okay, sellers are firmly in control of this market short term. And our roadmap idea is that at this point you want to be careful if you're on the long side, and the selling side is certainly in control. So we kind of zoom forward here, and you can see we had another level 2 selling aggression bar. That high holds. It wasn't until this level 2 buying bar comes in that we say, okay, we have to ask ourselves, okay, we see finally some buying strength. Let's see what happens. And you can then see, again, the low of this bar holds. Another one comes in. Low of this one holds. Let me zoom it forward here. Again, low of this one holds. And we get some follow through above, right in here. Okay, then we go forward, and you can see toward the end of the day then we also had another level 2 and then level 3 bar came in, level 2 bar. You can see again with this level 3 bar, the market was at that time so strong that the low wasn't even tested, and we had immediate follow through above the high of that level 3 bar, which at that time changes our expectation from the low being the expected support to the high of that bar being the expected support. And that's what happened at that point. And then we actually, to close the day, had another level 3 buying aggression bar near the cash close. You want to take those with a grain of salt, obviously. But so again, the point being here with our software, we have a lot of different pieces of evidence. But I wanted to just focus in on these aggression bars because it's kind of a simple concept to understand. When an aggression bar comes in, a level 2 or level 3 aggression bar comes in, which side wins? That's giving us basically a roadmap to the short-term directionality of the market. So hopefully that makes sense. In terms of the bigger picture bias heading into tomorrow, the bulls are showing some strength here on the close, but our bigger picture bias still has us in a down auction. We want to monitor the 1345 area especially, to kind of be a bit of a line in the sand. And also let's monitor the 1326 and the 1321 quarter areas overnight and tomorrow to see if they can hold, or if they get taken out, because that'll be pretty telling as well. So again, just wanted to show how these level 2 and level 3 bars really give you the roadmap to the market. If you have other questions, don't hesitate to send us an email at info@daytradethemarkets.com or 919-443-2423, and we'll look forward to speaking with you. Thanks.